Good afternoon, YouTubers. It's TK for ReadySetFutures and ReadySetFutures.com. Coming to you from the left coast of the USA, it is your daily market wrap-up for the 29th of September 2016, and here are your headlines for the day. Copper continuing to build into a tight little range. Gold stuck at its lower value area boundary. Crude extended its gains, but is the deal really a non-deal? And the ES is our big story of the day, reacting to German bank apocalypse or some such phraseology. We've got up here our hourly chart of copper, and you can see the volume building in this node between 2.206 and 2.18 over the past handful of days. We are trading above both volume weighted average prices, both from this move down in July and this move up most recently here at the beginning of the month. A little to report, is this commodity going to extend back up to the upper end of its trading range? I really don't think so. I honestly think we're going to see copper back down here, at least retesting 2.16 at the volume weighted average price, the longer term volume weighted average price, or a little lower at 2.15 here at the volume point of control for both this current move and its last move. Alternatively, we may see it continue to consolidate. We may get a local push in volume higher, and then that, most certainly, in my opinion, we'd end up seeing action lower with the same real targets, 215 to 220. That's our analysis on copper. Let's head over to gold, and here's gold. Again, an hourly chart on gold. Ever since its most recent run-up. Let me go out just a second here. We'll go back to the 4 hour. And you can see here the December lows down here. And we're back up into this consolidation zone that's beginning to lean lower. Right? We've been talking about gold for a number of weeks here, and our thesis on gold is that it's lower before it's higher, but higher is the way it's going. It could break, right? It could break any time now, especially with some of the stuff that's going on in the banking sector. Wow. We'll get to that when we talked about the ES, but if we're smelling another bailout, sure, gold could, it could be a deflationary bit for gold if the markets drop significantly. But if there's a large amount of easy money coming into the picture, well, it's just kind of more of the same, and we could see gold much higher. So, trading definitely below the volume weighted average price, trading below the volume point of control for this, and likely we're going to see the volume point of control for gold shift lower. Right now it is at 1340. And we're likely going to see it down here at 1327. Now, right, the premise here for volume profile is when we begin to see that shifting of high volume nodes, and especially the volume point of control, that means business is done, right? The accumulation, the consolidation is complete, and we're likely to get some move higher or lower away from that high volume zone. My opinion is that move is going to be lower. Take a look at here our weekly review. Take a look at our commitment to trader analysis for gold as well, and you can see that that is also supported by the commitment to trader and some of our longer term views in gold. So today's action pretty choppy, still stuck here around at the lower value area boundary. It's now trading above it. And so getting acceptance above it, that's a positive thing if you're a bull. But we could, like I said, we could see gold lower before it goes higher. Heading now over to crude. What to say about crude? Well, yesterday, right, we broke through our longer-term resistance line. This has been holding up since the beginning of August, and we gained acceptance above it. We're trading above the upper value area boundary. Technically, yeah, this should go higher. However, I'm not convinced. I'm not convinced this is a deal. I'm not convinced that we have the right logistics or we have the right negotiators. I read an article today that Iraq is already balking at the deal, that OPEC as an organization has misstated their production numbers, and so they're going to be asking them to cut off of a lower target relative to what they're actually producing. So the net effect for them would be a more severe cut than otherwise would be asked. This group, I don't know. If you look at their track record, if the past has any bearing on future performance, which we all know, in trading, there's no guarantee of that. But in this case, their track record is absolutely abysmal between talk and rumor and action. It hasn't lined up in the past 2 years. And why now? I don't know. Could be because the Saudi Arabian deficit is quite large. It's getting larger. It's almost a nearly full subsidization of the larger economy based on oil sales. So where we go from here, who knows? There's now other interests that are looking for higher oil prices. Those are national interests, but they're not everyone's national interests. So others are fighting over market share, specifically Iran and likely Iraq. So, Saudis aren't the only game in town. They're not the only body at the table. One of the biggest, but maybe not the only one. So that's crude. Could be higher. Certainly could be higher. If this deal holds up, yeah, I wouldn't $50 oil is not, wouldn't be unheard of, even $53, $54 oil. But I am suspect of this deal. Commitment to trader action, when we look at it over the weekend, we'll have a better feel at that point. Lastly, the ES, but definitely not least. The ES action today was incredible. I don't know if you guys, if you're day trading this, man, what a sell-off today was. On the back of Deutsche Bank. Deutsche Bank down almost 8-9% at one point today. I thought they were going to have the uptick rule, the short selling rule pulled on them. But, as you can see, we called it earlier this morning before the market opened. We were looking at this triangle here forming up. We were looking at this longer-term volume weighted average price from our Brexit action. We've been talking about this for a long time. And we came right down to it. It was really a terrific technical move on the ES. You guys know I was short from 21.52.75. And I got my system. I didn't want to get out, but my system called me out on the exit or on the close. So I closed my position at 21.44 for a tidy little profit. Again, my target was 21.29, but I do have a few indicator based stops, and one of those was triggered. So we follow the system, and I'm not complaining. Although I would have liked to hold on. We got to be plain and predictable. In any event, so yeah, great action today on the ES. Couldn't hold a bid at the beginning. We'll drop it in here to see what the full day's action was. And you can see, yeah, this is the high volume area down here, but it wasn't so until really the very, very end of the day. Most of the volume was traded up here at the beginning of the day, but once news of people pulling some of their funding out of Deutsche Bank hit, it was all she wrote for this market. So it was a great, good opportunity. If you were a bear, but even if you were a bull, right, you could have had two opportunities. I mean, if you were listening to us and you liked that then you like that support line, man, that was a heck of a trade right back into the daily volume weighted average price, as well as our longer term VWAP. Both of them were really prescient today. So, good news on the short side, and there really were a couple good opportunities on the long side in the ES today. Traders, that's what we got for you. I'm trying to keep these under 10 minutes. That's been the feedback that I've gotten. That's a good length, so we're gonna keep it there until you guys give me some other feedback that you want more. So, as always, your money, your account, your decision. If you like it, and if you like it that much, go ahead and click subscribe. We'll be here every day for your daily market wrap up, and that is your daily market wrap up for 29 September.